This is Lecture 4.4, Responsibility Statements for a Merchandising Business. This is found, I am not ready for you. This is found on page 111 of your book. Okay, here we go. The first responsibility statement that we have is called our departmental margin statement for the audio department of our business. First, we need to determine net sales for our department. We know how to do that. We will take our sales minus any discounts, returns, and allowances to get our net sales. Then we need to determine the cost of merchandise sold for the department. We will do that by taking our beginning inventory and taking away any purchases, less any purchase discount or returns will give us our net purchases. We'll have our merchandise plus any purchases minus any discount will give us our net purchases. Then we'll have our total cost cost of merchandise available for sale less the merchandise inventory at the end of the fiscal period will give us our cost of merchandise sold. And our gross profit on operations by taking our net sales minus our cost of merchandise sold will give us our gross profit on operations of $159,492.60. Then we need to record the direct expenses of the department. Remember, those are specifically for audio department. So we have advertising, depreciation on equipment, payroll, etc. Those things will be taken off from our gross profit on operations, and our departmental margin is right here at $49,222.61. To figure out our component percentages on departmental margin statements, we will take our departmental margin, which is our last number on our departmental margin statement, $49,222.61. We'll divide that by our net sales of $344,476.46, and to give us our component percentage for a departmental margin of 14.3%. This will tell us what our margin was for the following years, respectively. Okay, the departmental margin statement for video, we do the exact same thing. We'll get our departmental margin statement and our income statement to use. We will prepare our heading using the income statement. Use information from the departmental margin statements to get all of this information here. Then we'll use information from the income statement columns with a worksheet that we just completed. Here, we'll complete the income statement and we'll calculate these component percentages on this side. Okay, remember, all of these are just this number divided by your net sales. Statement of stockholders' equity is our next responsibility statement we have. This is found on, let me find, 115 of your book. A financial statement that shows changes in a corporation's ownership for a fiscal period is called your statement of stockholders' equity. Here we talk about what stock we are issuing. We have capital stock, and capital stock is the total shares of ownership in a corporation. We also have retained earnings, which is an amount earned by a corporation not yet distributed to stockholders. So we have $170 per share. We issued 2,000 shares on January 1st of the current year. To give us $340,000 even. We didn't issue any during the current year, so our balance is $340 even. Our retained earnings would be our balance as of January 1st, then our net income after federal income tax, less any dividends, will give us our net increase during the year, and we can find our total stockholders' equity here. Here's our balance sheet. This is on 116. We've done this a lot of times. You have your assets and then your liabilities and your stockholders' equity down at the bottom, and that's what you need to know for 4.4.